Investing in social networks is one of the most popular areas in the tech space right now, but most investors make really poor decisions when it comes to picking the right stock to invest in just because they don't understand the sites at all. They don't know how each social network makes money. They have no idea why businesses would want to buy those services, and if businesses are actually getting a return on those services, which would indicate whether they want to keep using them. They don't understand why users use these services, which is important because if you understand why a user uses a service, you'll be able to more accurately predict how easily that service could be replaced and how important that service is going to be going forward. So it really helps give you a good insight into which networks are for real and which networks might disappear in a few years like MySpace did. So in this video, we're going to talk about all those things, and based on that information, we're then going to discuss which network is currently the best buy for investing. And particularly, we're going to focus on Twitter, Facebook, and LinkedIn, as those are the three major social networks. Everything else is a little bit too small right now to consider or not public. So investors tend to make poor decisions when investing in social because they have no idea how each site makes money, they have no idea why or how people use each network, they have no clear idea about how each company will look in a year, or at least they have no logical explanation for their belief other than, oh, this stock's hot or this company's out. And that's not a valid opinion, that's not a valid rationale. You need to know why things are going the direction that they go. And really what happens is most people just invest based on other people's opinions, or just repeating news stories over and over again. And this causes stock prices to drastically differ from the companies that these stocks actually represent. And the problem with this is that earnings always wins out over time. So, the stocks might balloon in price now, but if the earnings never come, eventually they're going to crash. And that was kind of like Facebook around the IPO. 6 months came and went, and no earnings came in, and the stock tanked as a result. The same thing can happen with the other two sites, and that's what we're going to discuss in this presentation. So first, let's talk about how each network makes money. Facebook's got the biggest advertising platform. They have the most things going for them. Advertisers can buy ads, which are both for links to external sites, but also advertisers will advertise to users, asking those users to like a particular brand or business. Once a business has a fan, when that business makes posts, some of the fans will see those posts. Having fans also allows Facebook advertisers to use the sponsored stories feature, which makes posts and advertisements appear in the feed, which is like the homepage per se, of friends of fans. So let's say John liked, Coca-Cola, and Coca-Cola puts out a sponsored story. John's friend Bob logs onto Facebook. Bob will see that sponsored story from Coca-Cola with a little symbol that says, John, your friend likes this, So it's kind of like sponsored stories allow advertisers to basically advertise that, people's friends like this page. They're basically advertising to Bob, say, hey, your buddy John likes us, why don't you like us too, or follow whatever we're advertising. And boosted posts works in a similar way, but basically when a business has a fan page and they make a post, that post actually only appears on a small fraction of their fans' pages because, a news feed is busy, there's lots of updates going on. If Facebook's algorithm decides that update is not particularly relevant to a user, it's not going to show every post. Well, if a business wants those posts to appear in most of their fans' views, or at least like a quarter, they can use the boosted post option to make sure their post is seen by a lot more users. And if you're following this at all, this basically means that every advertisement on Facebook builds on the past one. So advertisers will pay for likes, and they're buying those likes so that they can use sponsored stories and boosted posts more effectively. And the more likes they have, the more expensive these later two things are. So it's like they're paying to pay more. So it's like, advertisers are investing in these likes, and they're going to want to spend to take advantage of their investment. And it just makes Facebook very profitable. Facebook also has the demographics advantage because people put in all their personal information. They put in their age, their interests, their job, all, everything, their education, their gender, their relationship status, whether they have kids or not. It allows advertisers to get very specific with who they want to show their ads to. And again, Facebook's able to charge more for that. LinkedIn has an interesting advertising system or monetization system. One of their main sources of revenue is actually from the users themselves. Regular users can get a premium account, which lets them see who's viewed their profile. It lets them see jobs more easily. It just lets them do more on the site, and it's a monthly subscription that's fairly expensive. It can be as little as $8 a month, but the higher end service is like $40 or more a month. So LinkedIn is trying to make money off of a subscription model, which is typically more lucrative than the standard advertisements. Facebook will be lucky to make $5 or $10 off of a user in the course of a year off of its advertisements. Maybe, over time it could reach 20, but if somebody's paying $30 a month and they're spending $350 a year, there's no comparison there. And LinkedIn also has advertisements. The main form of those are sponsored jobs, where businesses looking to fill a position will have their position featured so that it gets seen by more LinkedIn browsers. And in a weird twist, you can actually do the same thing when you actually apply to a job, where job applicants can pay to put their application on the top of the virtual pile, so to speak, to make sure that it's actually seen by the company that's put out the job advertisement. Finally, Twitter, it's the newest, so it's naturally the least developed. They have similar, they're really copying Facebook's advertising system, which is not a bad thing because Facebook's done well. It's always smart to copy the successful. They have a featured accounts thing, which is similar to the Facebook advertisements for likes, but instead of for likes, they're advertising for users to follow that account. So a business will put up their account to be followed. If a user of Twitter follows it, Twitter will make money. The most common way, or the most obvious sort of way that Twitter would make money is through the paid tweets feature, and that allows advertisers to put out tweets that are seen by users in their feed. This seems like logical, like the easy way for Twitter to make money, but the problem with this is that most tweets disappear entirely after an hour. They're just pushed out of the user's feed. So Twitter's trying to remedy this by making the tweets stick around a little bit longer, and try to keep them open, but it's still a problem because people's feeds are much busier on Twitter than they are on Facebook. So it's harder for advertisements in the form of paid tweets to get a lot of a user's attention on Twitter. And another thing on Twitter is the featured trend. If you've ever heard of hashtags, if you're not a Twitter user, basically when a user issues a tweet, they'll put a hashtag along with what their tweet is sort of about. So if they're watching the Super Bowl, they would use hashtag Super Bowl at the end of their tweet if they were talking about that. And if everyone's using the same hashtag, it becomes featured, and it allows people to see what's popular on Twitter at the moment. If something unusual happens, it might pop up in the trends. People are discussing it. And a feature trend allows a trend that's not really a trend to appear, to try to generate buzz about a particular topic. One of the things I've seen is like Pro Bowl or something like that trending, or VMAs or the Oscars, like paying for a featured event that's happening. And that's a good way to make money, but really there's only so many featured trends that can show at once, but it could pull in some decent revenue. And the real question is, now that you know how each network makes some money, you want to understand how and why people use each network so you can understand the longevity of that and why businesses would want to advertise on those platforms to see how these platforms are going to grow revenue. Facebook is mostly used for people looking to connect and converse with friends and family by sharing photos and posts. They do this in a way that's not very fast, like Twitter. It's very slow. You make a post, it sticks on your homepage all day, and people can comment on it or like it or whatever. You can come back to it and check it and comment back, and people will go back and forth in like a much slower fashion. Most Facebook interactions occur between friends and friends of friends, whereas a lot of interactions on Twitter are just, since it's moving so quickly, you can't wait for your friends to get in. A lot of interactions on Twitter, occur between strangers. So the difference is that when people use Facebook, they're really connecting with their friends, they're sharing photos, they're following relatives, they're following their children, they're following their parents. It's a way for people to interact with primarily their actual physical social network of people that they've met before in real life. Whereas LinkedIn is completely different than every other social network. It's basically a virtual resume that allows users to vouch for one another. They can attest to another's skills, they can pass job offers along to one another, and businesses can post on LinkedIn. So people use LinkedIn because they need to for their job. They're not using it for any other purpose. It's like you must use LinkedIn if you want to do business in like the tech field. And over time, as more businesses get involved, anyone doing business, technology, any white collar work really, you're going to need a LinkedIn account, and you're going to need to use it whether you like it or not, just because that's how people get jobs. That's how people bid on contracts. That's, how you connect with people and evaluate people that you want to do business with. And Twitter is, this is what really surprises people that don't know any better, is that Twitter is by far the least social of these three networks. Most users on Twitter do not actually post. They sign up for an account, they follow a couple celebrities and a couple news broadcasting or entertainment story stations just to get updates to their phone. They actually almost never tweet, never interact with anyone on the site. They just get the funny bits that celebrities send in, and they get links to relevant news stories or entertainment stories from sources that they're interested in. So Twitter's user count it's just not quite the same as the other two. When their interaction on the site, it's just not. Most users don't tweet, so they're not actually interacting on the site. They're not participating in the social function of the site. And as a result, I think that over time, Twitter is just not going to be able to command the kind of interest that Facebook or LinkedIn does. LinkedIn's value is obvious. You need a job. You might pay for the premium account until you find a job. And Facebook, it's just a much more social of the platforms. Businesses want to get on there to converse with their fans. Whereas on Twitter, it's like it's a more of a one-way conversation. The business will broadcast to their fans, but a lot of the fans won't respond like they will on Facebook. It's just, most people just don't respond. They just are following. So, it's good for customer support, though, Twitter is. But, only a small number of customers ever contact customer support, even if they're having a problem. So, it's not that Twitter's useless. It's just not quite on the same level. And this sort of leads to the stability of each network. LinkedIn is definitely the most stable social network. I can't imagine LinkedIn vanishes, in the next 5 years. And that's saying a lot for the tech space, or the internet space. Things don't last very long. The iPhone just came out 5 or 6 years ago. The iPad wasn't even around 5 or 6 years ago. 5 years ago, laptops and netbooks were still, the primary form of technology sales, whereas now it's tablets and phones. So things move quickly, but LinkedIn's just not going anywhere. And that's because people need this. They actually need this network the most. They need it to get a job. They need it to get a promotion. They need it to get references. It's hard to get a job in technology or business now without it, especially if you're young. It's just going to get harder over time. You need a LinkedIn page. Facebook has high stability, not as high as LinkedIn, because people want to use it. They don't need it. But it's still very stable because people become attached to their accounts. Like when you make a profile, you upload pictures, you post, you make friends, you put up whole photo albums, you comment on people's photos. It's not as if somebody can pick up and leave from Facebook if a better service came around. That's why sites like Google Plus just aren't taking off, because people don't feel like leaving Facebook, even if there was something better. There has to be some crazy thing that makes the other network so much better for people to want to leave it. And the more vulnerability for Facebook, rather than vanishing entirely, is that people will just spend a little less time on it. There's other applications like Twitter and WhatsApp, all the mobile sort of devices for communication, Snapchat, Instagram. Those might take time away from Facebook, but they won't decrease Facebook's user count altogether. And people might get on Facebook less because they're using these other applications for instant communication. They might not use Facebook's messaging system or Facebook's chat, but they're still going to post their pictures and comment on other people's pictures and check out photo albums and just follow and connect with their friends and family on Facebook. That's not going anywhere. And really the least stable platform by far is Twitter, because people don't have to use Twitter, just like they don't have to use Facebook. But the problem is Twitter doesn't have the advantage of creating profiles of value. Twitter's trying to give businesses at least a way to make similar pages to Facebook. But for the user, a Twitter account just doesn't have value. It's like they sign up for the account, they follow a couple friends, they follow a couple celebrities, they follow a couple of news sources, and that's it. They're done. And every time they make a tweet, that tweet, it vanishes from more or less the Twitter sphere, or whatever they want to call it, in an hour, and then it's gone. There's no value. Unlike a Facebook account, you could upload thousands of pictures with hundreds of comments, make thousands of friends. Everyone you've ever run into, you might add to Facebook at some point. But Twitter, it's just not the same. Facebook is in a whole different playing field than Twitter. So when a service like WhatsApp, Snapchat, and Instagram, which is also owned by Facebook, comes around, really Twitter suffers the most, because Twitter is the least grounded of all of these, just because people don't value their account. And an example of this is a lot of times people do stupid things where they get really bad press, like they say something they shouldn't have said, something politically incorrect, or something just downright offensive. And as crowd control, one of the first things people do if something starts trending online is to delete their Twitter account. But these people will never delete their Facebook or LinkedIn account. They'll just make the accounts private. They can't give up their Facebook account. They can't give up their LinkedIn account. But there's no hesitation in deleting the Twitter account. So now that we've got all this information in mind, so we're going to check out each stock now. Let's look at sort of the financials. So we'll see that Facebook has a pretty high market cap, but it actually has a fairly low PE for this space, just because if we go to financials. Sorry, it's taking a little while. So we'll see that quarterly, Facebook's still growing, revenue pretty quickly, and this dip here is normal. Around Christmas, ads get more expensive. That's just the way it works, and this is 9 months, so ignore that. Ads get much more expensive around Christmas time, so no need to worry about the revenue dipping here. We'd be more wanting to compare that to the previous quarter. You can see that revenue is growing quickly. Annually, it's still growing very fast. Of course, it's going to top off as the numbers get larger. But still, the company's growing revenue quick, and it's making money. It's making $5 billion in revenue, and earnings are growing too. So net income. Let's get the quarterly data, since they bought Instagram. That was a big expense. That's why that net income dropped so much. And that's probably reflected in this 9 months here, their acquisition of Instagram. So you can see that net income is growing nicely too. So earnings are growing and revenue is growing, and that's good. So Facebook, the reason I bring this up is because I think that the revenue, from a revenue perspective, really LinkedIn is worth the most because it's the most stable, and Facebook is close to it just because it's also pretty stable, where Twitter's revenue to me is worth the least. If we look at LinkedIn, their growth is slowing down a bit, but it's still pretty nice period. They're still up 70% quarter to quarter, year over year. And their operating expenses have been going up as they're advertising and whatnot and increasing their technology or whatever. That's fine. I'm not too worried about earnings in a company this young, but the revenue growth is solid. Annually, it's huge. We're doubling up every year. And we won't quite hit that doubling up number, but we'll come close to the $400 million quarter. That's significant money. And this stock is going to make $1 billion, and they're only 23. So you're paying, $23 for $1 billion in revenue. Facebook, you're paying, and Facebook will probably make $8 billion this year. If in Facebook you're paying a similar price, $8 billion, you're paying even less, like $15 for $1 billion in revenue. So these are pretty fairly valued. I think that LinkedIn is particularly a bargain right now, just because it's kind of dipped. It's on the downswing because Twitter here has become so popular, and Twitter is just, I'm going to tell you, it's extremely overpriced. since its IPO, it shot up, and I don't know why, other than the fact that people don't know what they're doing. And the reason I say that is, let's look at the financial data for Twitter. Quarterly, yes, revenue's growing, but it's not growing at a rate that is shocking. Annually, yes, that's a nice jump. But we're talking about $168 million on a market cap that's almost double LinkedIn's at this point. Not quite, but 60, 70% higher. I'd pay more for a dollar of LinkedIn revenue than I would for Twitter, even in spite of the growth, just because this growth is slowing as the numbers get higher. We're talking about $30 million growth each quarter. Even this says 200 and 240 and 260 and 280, 300. It's just so far away from LinkedIn's level of revenue. It's not even comparable. LinkedIn makes 3 times the amount of money and it's still growing revenue, and it's just so much more. It's so incredibly more stable than Twitter. I just can't imagine why anyone would want to pay this much for Twitter, other than they don't know what they're doing. So with that in mind, I'm going to say that Twitter's overvalued, extremely overvalued. It might eventually grow into this market cap, but why would you want to buy a company that's going to take, even if Twitter continues to do fantastic, to have this kind of market cap and be priced similarly to LinkedIn or Facebook, it needs to make $2 or $3 billion a year in revenue. Even with this growth, we are several years at a minimum of being priced similarly to Facebook and LinkedIn. And meanwhile, these companies are going to grow their revenue. So it's like, why would you? It's just so far out. It's incredibly overpriced. So I hope this convinces you not to buy LinkedIn or Twitter at this level. Invest in LinkedIn or even Facebook. And you might come back to Twitter in a couple of years. Once it's actually worth this kind of money, if Twitter actually sticks around that long, sure. But for now, it's just too expensive, and just, stay away from it.